Welcome to the DMV Group Podcast. The DMV Group is a team of driven, experienced realtors ready to put their expertise to work for you. Christine, Steve, and Patricia, the team leaders, offer a combined 30 years of real estate experience that includes overseeing 160 agent teams with $750 million in annual sales, helping over 1,000 families achieve their dreams. The DMV Group guides their clients with transparency and insight, arming every buyer or seller with the knowledge they need to make the right decision for their future. Hailing from different professional backgrounds, they combine each of their distinct skill sets to help clients navigate every life transition with confidence. So whether you're looking to downsize, move up, purchase your first home, or grow your investment portfolio, the DMV Group will be there. On this edition of the DMV Group Podcast, we're joined by Rob Ross from Intercostal Mortgage. With more than 15 years in the residential mortgage industry, Rob works hard to find the best ways to help people looking for their bit of the American dream, home ownership. From first-time home buyers to savvy real estate investors, his forte is finding the financing that you need and creating a smooth process from start to finish. Enjoy.
We have a special guest this week. We're talking to Rob Ross from Intercostal Mortgage. Rob, real quick, just how long you been in the business? Just give us a little background.
Yeah. So as Steve said, my name's Rob Ross. I'm the executive vice president over at Intercostal Mortgage Company, based out of Fairfax, Virginia. Been in the business 20 years now, which is hard for me to believe, but 20 years has gone by pretty quickly. And specialize in residential financing in the DC metro area, licensed in 15 states up and down the East Coast. And residential financing, construction financing, and pretty much all things residential.
Nice. Any specialties within that?
Yeah, specialties. Intercoastal, we are a construction lender, so new construction lending or renovation lending. So there's, you could call 100, I always say you could look in the yellow pages, or I guess it's Google now, right? But, and you could look up 100 mortgage companies in the area, and only about 4 or 5 companies handle construction lending. So that is something that we specialize in. We do all the plain vanilla stuff as well. So your government loans, your Fannie, Freddie backed securities, FHA, VA, VHDA, first-time home buyer programs. So we really run the whole gamut with regards to types of programs. But one of our specialties and niche products is definitely construction financing.
Okay. You doing a lot of those right now? Or?
Yes, we are doing quite a few of those, especially with the unfortunate pandemic that we've been in. A lot of people are going stir crazy sitting in their homes all day, right? So it's nice to be sitting here in a shirt and tie right now, but my hooded sweatshirts wouldn't have been as good for this video. But due to this pandemic, a lot of people have been staring at their walls, and they either want new walls, meaning renovation, or a new home, which is where you guys come into play as well, from a real estate standpoint, is helping them find the new home. But one of the things we're seeing is they're not finding the homes right now because the inventory is so challenging or low or competitive. We had one the other day, they had 19 offers on a home in McLean, 19 offers. So our offer was very competitive, but I also can't make a client go 100,000 above listing or asking price, right? Listing. So, sometimes they don't win the contract, and we have to kind of take a step back and go back to the drawing board and figure out, should you be looking at resales, or should you be renovating your own home, right? Or should you be finding a home that maybe is a little less desirable on the market? It's been on the market more than 5 minutes and it's been on the market for 30 days, 45 days, and they're not getting any offers. Maybe the kitchen's really outdated or something's wrong with that home. So let's not discount that. Let's start looking at a construction loan or a renovation loan, whatever you want to call it. And that might be something that you as a client should really look into, because now you found the perfect location near your job, everything's perfect, but when you walk in, you don't have to be disgusted with the kitchen. That's a Brady Bunch kitchen, right? You can have an upgraded kitchen and make it exactly what you want it to be. So I think that's really important right now.
Yeah. So tell me, what do people need to do to qualify for a construction loan? I know it's a big loaded question there, but
no, good question. So to qualify for a construction loan it's the same qualification process as any traditional loan. So we're going to verify credit. You have to have a minimum credit score, right? Which for construction loans is 700. So you have to have a reasonably good credit score to obtain a construction loan. We're going to look at assets to make sure you have the down payments. We're going to look at your debt to income ratio. So your employment, all your debts divided out just like a normal loan. And really that's that. That's it. Assets, debt to income ratio, being income, and credit score, and we're going to qualify you the same exact way. So it's not any different. It's a two-step process. You close on a construction loan, and then you go back to closing or a conversion, whatever you want to call it, when your home is built or renovated. So most renovations in the DC metro area are taking 6 months to 1 year. So somewhere between the 6-month mark to the 1 year mark, your home is now complete. So you've gone to the county, your permits are good, you now have your certificate of occupancy, and you are able to move into your home. And once we hit that point, we then convert you to your traditional 30-year fixed mortgage, or whatever you really desire at that point. It doesn't have to be a 30-year fixed, but with rates so low, most people are converting to that 30-year fixed. So
Great.
So Rob, are there any programs that are available to first-time home buyers?
There are, and that depends on the area that you're purchasing. So for us, the DMV Group, DC, Maryland, Virginia, right? Virginia, you have the MPP programs, which is their version of first-time home buying programs. Think of it similar to VHDA in Virginia, or similar to DC Open Doors for Washington, DC. So all three areas have their own government-backed or county-backed programs that clients can qualify for. As a lender, we have access to all of those. So it's kind of case by case. So when a client applies with us, we look at their overall qualifications, and we can help determine based on where they're looking to buy, if there's any grants, first-time home buying programs in that area that might suit them. A lot of the first-time home buying programs are really made for clients that absolutely need 100% financing. So it is available, and who would have thought, you can get 100% financing on a home. But then sometimes clients, we'll show them two options. We'll say, because they want to put down 5%. They say, I can put down 5%. I'm comfortable doing that. But what about this 100%? Why would I not do that? So we'll show them side by side. Here's the 100% financing first-time home buyer program, and here's your 5% down. And then we educate them, because at the end of the day, it's my job to educate clients. It's not my job to make a decision for them. And I always tell clients, I'm not going to give you my opinion on which you should choose unless you ask for it. So if a client asks for my opinion, I'm happy to say, based upon what I see other clients do, or based upon what I would do in your situation, this might be a route that I would go. But I try not to give an opinion to a home buyer, because there's really not a right or wrong decision, right? It's, if you qualify for both loans, do you want 5% left over in your checking, or do you want 100% financing? If you want to say there's a disadvantage to some first-time home buyer programs, which might be the wrong word to use, because I don't believe there's a major disadvantage to it, the rates and fees are a little higher on those programs. So sometimes if you do have the 5% to put down and you are comfortable doing that, then, and you ask my opinion, then I'm going to say, yeah, go ahead with the 5% down. It's going to make your offer more competitive versus other offers, because you have some skin in the game, and your payment's going to be lower. So,
are there income qualifications for this?
Yes, there are. And again, per county, per state, per demographic, it's all there, right? So there's fortunately for me, I don't have to know any of that. I go to their computer system, I punch in an address, and I put in a social security number and a little bit of info, and it says, here's what you qualify for.
So the market right now is super tight in terms of inventory. There's multiple offers on most of the properties that we're seeing. Are there any things that buyers can do from the lender side that can help them in terms of their contract and their offer?
Yeah, absolutely. Getting fully approved. Clients can call me and I can have you pre-approved, as you guys know, in 20 minutes if someone needs pre-approved. And a pre-approval is absolutely the best place to start, right? You can't put the cart before the horse. And so you have to get pre-approved. I need to know that something actually could work. Once we hit the pre-approval standpoint, I'll work with your client, give them a document list and say, all right, you've told me you make $100,000 a year salary. Now prove it to me. So give me your pay stubs, your W-2s, your tax returns, whatever we need for that specific scenario. And let's get you fully approved through processing and through underwriting. We'll run their file through a system called DU or LP through Fannie Mae and Freddie Mac. It's a national processing system. So we'll get verifications through both of those that they're approved. And in some cases, we might get an appraisal waiver, which was new for 2020. Depending on their down payment and their criteria and where the property's located, that's the most really the most important part. So if you go to the outskirts of the DC metro area, you go out to like Orange County, Virginia, or nothing wrong with any of the outskirts, but where there's less inventory, or less homes don't turn over as much. Arlington, Virginia, there's homes turning over by the second, right? So where there's more comps, you have a better chance of getting an appraisal waiver. So all of those things, appraisal waivers, DU and LP approvals, verifying documents up front, that's going to help solidify and strengthen your buyer's offer. In addition to that, over at the Ross Group, we will always call the listing agent. So upon you presenting the offer, we don't want to call beforehand, but once you submit the offer, we're going to call and say, the DMV Group, here's an offer from a buyer. We're the lender on the other side. We've been lending for 20 years. We've already run it through DU and LP. By the way, we've got a waiver or not. And we're going to really sell your client for them, and let them know that we are a local lender that's going to get it across the finish line, which is the most important part. So
it's great that you're proactive in terms of helping the listing agent to understand that our client is strong.
Yeah, you have to be, because unfortunately, there are some lenders that are vacant. They're not calling, and they're not checking in, and they're not local. And I think being local is massively important as well. We know the market. There's a good chance that I might know the listing agent because I've done this 20 years. So it's kind of funny to say that, but some of my favorite phone calls are when I can call a client and say, of course, after you've called them and said, congrats, you're ratified, you guys send me a copy of the contract. I've immediately called them afterwards and said, congrats on your contract, super excited for you. By the way, I knew the listing agent. I've done multiple deals with them. And she said that really, he or she said that really helped you win the offer.
So in this market, we're actually seeing a lot of people who are making offers that are waiving their financing contingency. They are still getting loans, but they're waiving that.
Sure.
What kind of exposure do they have?
Yeah, exposure, and why are they doing it, right? So a few different things. Well, the exposure is they have to be prepared to pay cash if their loan falls through, right? So that would be some exposure. And how do we prevent that? How do we prevent that panic? It's just getting fully approved, right? It's taking a step back, identifying. You don't even have to identify a property. I could get someone fully approved on a to be determined address. So you could say, Rob, I want to buy a home no more than $1 million in McLean and put 20% down. And I want to buy a single family home. You can get pre-approved with me. I'll pull your credit. I'll verify your income and your assets. We'll make sure everything's there, and we will fully approve you. So when you go make an offer, it's basically a cash offer subject to appraisal, right? Because I can't order an appraisal on a to be determined address. So we will get you fully approved. We will make sure that in our offer letter that we present you with, we do not need to verify income and we do not need to verify assets. And it's almost as good as a cash offer, right? A cash offer, you don't need an appraisal. If you're getting financing, you still need an appraisal in most cases. So yes, there's an inherent risk there by waiving a finance contingency. But if you're working with the right lender and the clients have taken the steps to actually submit their documents, then it's no worry, right? And at the end of the day, I'm not going to recommend it to a client unless they have fully applied with us, right? So I will not give that letter without a contingency unless I'm 100% sure.
In this environment, or in this market, we're seeing buyers agents have to try to make their offer as sharp as possible, right? There's going to be multiple offers, there's going to be 10, 15, 20 offers on a property. So what listing agents are saying is, are you willing to drop financing contingency? Meaning, when we kind of already talked about that, meaning now you're fully exposed, if you don't qualify financially, that you're going to be paying cash. But another thing they're asking for is, obviously home inspection. Can you waive home inspection and just make it contingent upon, you can void the contract, but we're not going to pay any repairs? And then one of the other things they're asking is can you waive appraisal?
Yeah.
Right?
Yeah.
And that makes me uncomfortable as an agent putting an offer together and saying, hey, we're gonna make an offer, and it's the offer's not contingent upon appraisal. So what does that mean to you when you see that come through on your desk?
So it means a few things, right? One, ultimately, it's up to your buyer to make that final decision, right? So I know you said it kind of makes you uncomfortable as the agent to say, let's waive the appraisal. I mean, honestly, it makes me uncomfortable as the lender to say, waive the appraisal. That doesn't mean that it doesn't happen. That doesn't mean that I don't see it all the time, because I do. Right. And all it means is we have to educate the buyer, and we as the agents on one end and the lender on my end, we have to be careful. We have to dot our I's and cross our T's. And what I mean by saying that, it's the location, right? It's location of the property. If you're in a hot location with a ton of listings going on and they're selling and flying off like hotcakes, then odds are the appraisals are going to come in fine, right? There's certain geographic locations where there's enough comps where appraisals don't seem to be an issue. What does it mean to the lender? So I had a buyer the other day. They waived the appraisal contingency. They had the means to pay cash for their home. They really weren't worried. They said, yeah, we'll waive the appraisal contingency. We know the neighborhood. We know it's going to appraise. We're really not worried about it. And when they're saying that, then we both relax. We're like, great, no big deal. But in that case, they actually called me and said, hey, I found out you ordered an appraisal. Why did you order an appraisal on the property? I waived the contingency. And I said, you waived the contingency, but I'm still financing your home for $1 million, right?
Yeah.
So I need to make sure that your house is worth whatever, $1 million or more. And if it's not worth $1 million, I'm going to lend you 80% of the lower of the two. So here's the answer. So lenders lend off the lower of the two, the appraisal or the sales price. So if your sales price is $1 million, but your appraisal is $950, we're going to give you an 80% loan or whatever you want of the $950. Right. So you have to come up with that $50,000 delta in that example.
Yeah.
So as you guys are doing your comps going, yeah, I know the house was listed as at $1 million and it escalated to 1.1 million. As the agent, you're still doing your searches going, man, there's comps out there. I think it's going to be really close to hitting that 1.1. I think you're going to get close. I don't know. I'm not an appraiser, but I think you're going to get close. And then they're asking my opinion, and I'm saying the same thing. Talk to your agent, but yeah, it seems like you're going to be close. But by the way, here's your worst case scenario. Let's say it just comes in at list price. This is what you're going to have to do. Well, I guess the worst case scenario is it could come in below list price. You never know, right? So they just have to be prepared to come up with the difference.
Yeah, exactly.
Is the answer.
The first thing I think about is I go to my buyer and I say basically what you said. Worst case scenario is it's $1 million home. You've bid, let's say it went over asking price. You're at 1.1 million.
Yep.
So my first question is if there's $100,000 delta, are you prepared to pay that in cash? So I want to know, are they prepared or are they willing to pay it? And if they say yes, my second call is to Rob to say, can they pay it?
Can they
right?
pay it? Yep.
Do they have the reserves they say they have? Because once we make that offer, and they've accepted it, and now we waived appraisal, well, they got to pay it. I mean, they got to come up with the money, or they got to pay cash. So that's kind of the predicament you get into. So
and to add to that, Steve, is let's forget $1 million sales price. Let's say it's just a traditional conforming loan, right? Let's say it's $500,000 sales price, and they wanted to put down 20%, and the appraisal comes in lower. Well, now I'm just going to give them a 90% loan or a 95% loan, so they can still. It came in lower, but I can just lend them a little bit more money now, right? Because you don't have to always do 20% down, right? We have jumbo loans right now, just so you know, where we can do 5% down to $1 million. And we can do 10% down to $1.5 million. So there are options for that higher end buyer that says, I want to put down 20%. They waive the appraisal. It comes in a little lower. They're like, I can bring the cash. I didn't really want to. No problem. We'll give you a 90% loan now. So there's some options. I mean, at the end of the day, kind of here's the reality. I've done this 20 years, and I can't think of one issue. Where's the wood to knock on? So and at the end of the day, appraisals have worked out. The buyers that have waived the contingencies, even if it came in a little lower and they owed an extra 20 grand, they were prepared to do it. There was never. It's communication, and as long as we're communicating right with these buyers, and the buyers are communicating honestly with us, it has to go both ways. Then there's really no issues, especially in this hot DC market.
Hey Rob, with everything that's going on the past year with COVID. There's a couple things I think that have impacted the housing market. One of them is forbearance. Tell me your thoughts on that, and how is that? First of all, explain it to our audience so they understand what we're talking about, and what impact is that having on future purchases or?
Sure, it is having somewhat of an impact, but you can get and somewhat of a negative impact in some cases. And it's literally due to lack of knowledge from a lot of the clients, but they can get out of it. So there is a happy ending to this story. So forbearance was put into place as COVID really hit last March and April and started taking over the world for that matter. A lot of people were losing their jobs and couldn't afford to make their mortgage payments, and still are in that position today. So they basically passed a law saying mortgage companies, you can allow clients to go into forbearance and not make their payments. So it doesn't mean you're forgiven the payment. It means the payment's tacked on to the end of the loan, and when you refinance your home someday, which we'll talk about, really when you sell your home, then you pay that back. Or you need to come out of forbearance. Well, they said it's not going to negatively impact your credit score, which is true. It does not impact your credit score. It does not show up on a credit report that you have made a late payment, which would significantly drop your credit score. What it shows up as loan in forbearance, and your balance just keeps going up because you're not making your payments. So how does that negatively impact you? A few ways. If you want to go refinance, you can't refinance if you're in forbearance. So rates are really low right now, historic all-time lows. Right. So clients are calling saying, hey, I've been in forbearance 6 months. I now have my income steady again. I'm working, everything's good. My credit score is still good because forbearance didn't hurt my credit score. But now I want to refinance it wherever the rates are, 2.5%, low twos. I want to refinance it at a historic low rate. Great, I want to help you. Says here you're in forbearance. Yes, I deferred 6 months of payments. Okay, I can refinance you, but you have to do two things. You have to unenroll from the forbearance programs. You have to call your current service provider and unenroll from it, and show me that you've unenrolled. So you're no longer in forbearance, and you have to pay up. So the 6 months that you're behind, you have to pay up. And sometimes the answer I get is, well, that was $35,000 and I don't have $35,000 to pay up. Then you can't refinance right now. So there is a challenge with that. Or you can't go obtain a new loan to buy a new home right now. You have to pay up. How would you do that to buy a new home? That would be fine. You could sell your home. Once your home's sold, you've paid up through the equity. You're out of forbearance, you can go buy a new home, right? So you have to pay up. So some clients have said, well, I need the next 6 months to pay up and catch up, and then I'll come back to refinance, which that can work too. So, and a lot of people got into the forbearance and didn't realize it. This was the craziest part. They would literally get an email from their service provider at the beginning of this pandemic, and it would say, hey, due to COVID and everything we're going through, congratulations, you qualify for this forbearance program. It will not affect your credit score. We just tack on the payments to the end. Here's what it is. Click here to get enrolled. And it was literally like click and you're enrolled and done. And clients didn't really read the fine print and didn't really realize that it could negatively impact them being able to buy a new home. So.
Right. Okay, well, hopefully we're coming out of that.
Yeah.
One of the questions I get as an agent all the time is, well, aside from how's the market, we all get that. Yeah. But especially if somebody wants me to sell their house, the first question they say is, what are you going to charge me? What's your commission rate? Yeah. Right. So, and that's not frustrating, but maybe it is frustrating because you want to say that's a good question, but it's a longer explanation because it's like, hey, you're kind of going right to the last page of the book here, but I got to tell you a whole bunch of other stuff in terms of what we're going to do to sell your house and why we charge what we charge. I know the question you get all the time is hey, what's your rate? Right.
Yes.
So how do you answer that question?
So I laugh first when they call and ask what my rate is. So. No, very, very good question, and it's actually, it's funny. I think it's my least favorite question, but yet my favorite question at the same time because I've had the same answer for 20 years. So when someone calls and says, Rob, I was referred to you by so-and-so, and I'm interested in obtaining a loan or getting a pre-approval, but before I do that, I want to know what your interest rate is. And I always say, no problem. I have no problem giving you an interest rate quote. And nice to meet you, and glad you're working with Steve, and all that good stuff. Make a little small talk. I said, congratulations on your contract. And they're like, oh, no, I'm not under contract yet. I'm just debating starting my home search. Oh, sorry, you wanted an interest rate quote. Let me explain how that actually works. And I'll just tell them right there, you can't actually secure or lock in an interest rate until the day you have a ratified contract. And you haven't even started looking for a home yet. So we need to get pre-approved, get a letter, find the right home, win the offer, ratified contract, then lock in an interest rate. And guess what can change the interest rate? When can it change? Every minute, every day, just like the stock market. It can go up or down. And they'll say, well, I've already got a couple quotes out there, and I'll and this is what I say, and they laugh and they understand at the end. I'm like, Great, you got a couple quotes, no problem. What's the lowest quote you had? 2.75%. Great, I'm 2.6. They're like, really? I'm like, no. Or maybe, but it doesn't matter, because I will quote you lower than anyone if your criteria to get pre-approved is you just want the lowest quote that you can't lock in on right now. And then they laugh, they get it, and that's my icebreaker, because I'm like, I'm just trying to explain to you that it doesn't matter, but I wouldn't be one of the top lenders in the nation if I had higher rates than everyone else. And they're like, fair point. And I'm like, so here's the reality. You're gonna be taken care of on rate, you're gonna get an extremely low interest rate, we're hyper competitive, in fact, we're probably better than the other quotes you have. So don't worry about interest rate, but let me educate you on what you actually need to do to get to the point of securing an interest rate.
Yeah.
Oh, and by the way, interest rate is determined by loan product, down payment, credit score, so on and so on. There's like 22 factors that can determine an interest rate. So there's all this stuff to determine a rate. And I'm like, let me ask you this, the last lender you called that gave you an interest rate quote, did they ask you any questions? No. Did they educate you? No. Did they tell you anything I just told you? No. I'm like, well, hopefully that helps you make a determination on who you should be working with.
Yeah, because that's a big part of your job.
Education.
Yeah,
Education.
People, so they can make a good decision. It's not your job to make a decision. It's like, hey, I'll give you all the information, explain it clearly, you determine what's best for your situation.
And occasionally they say, okay, so what's your rate? I'm like, great. I'm like, 1%. You know,
It's free. It's free money.
It's free.
Now, what
I'm paying your mortgage. So
something that kind of goes along that same point is the first page of the regional sales contract. It says, because clients always ask me this one, I'll say, hey, what interest rate did you get when we're writing an offer we're going to ratify? And they'll say, what do you care? And I go, well, it's a section of the contract that has to go, that goes in there, because it kind of protects the buyer, which says, what, you know, if my rate was to increase over, let's say you were quoted a 3% interest rate, but it goes to 3.5 before you go, now you have a reason why you're going, well, now I can't afford it because the payments, you know, the interest rate's higher, my payment's higher, and now you have as long as you're still in the contingency period, to get out of the contract. So
it helps.
Yeah, knowing what your interest rate is important, and it does play a part in the contract. I'm not just being nosy when we ask.
Yeah, and I tell every client with rates at historic lows, everyone's buying a home or wants to buy a home because rates are so low.
Sure. And
there's not, you know, buyers were buying at 5%. They're going to buy at 2%, right? So it's affordability is the best it's ever been.
Yeah.
So
I bought at 5% 15 years ago.
Yeah.
10 years ago, or and the LL said this is before you, Rob.
Yeah.
But he said 5%. You got to take this. It's never been lower.
Never see it again.
Yeah. It's only going up from here, and of course now we're down under 3. So. So much for that theory.
Oh yeah, I have a client that I just refinanced 7 times in a row, no kidding, over like an 8-year period, and every year it's going down like 1%. They're in a 15-year fixed, and we refinanced them this year into the low 2s into a 15-year fixed, and he's like, man, what happens if next year we're at 1%? And I'm like, then we're high-fiving again, and you're now at 1%, and I'm calling all the clients that I just helped in the past year, and I'm not sleeping again for another year.
Yeah.
So,
one of the questions. As a buyer's agent, we're making offers and we're including that letter that you give us, right? The pre-approval letter.
Yep.
And the listing agent says, well, is your buyer, you know, qualified? And depending on what, as agents, we can disclose, we tell them, or we don't tell them, and we give them, you know, we say, here's the pre-qual letter, you know. So when those listing agents call you and say, hey, I got a contract from Steve, he wants to, you know, his client wants to buy. And, you know, John Smith, his client, I see you wrote a pre-qual letter. What does this really mean?
I mean, again, it going back to a few of our other questions, it have they fully applied or have they not? So it means two different things. But I can't tell the listing agent, hey, it's a salaried employee. They don't own their own business. They work for the government. They're very secure. Their income is actually published based on their grade. So their income is verifiable. I've already verified it. Again, we've run it through those computer automated systems that have a DU and LP approval, where it's as good as cash, right? And yes, we can close quickly. That's one thing we really haven't talked about as part of that letter. A lot of those letters, really, the agents are calling saying, have they applied? Yes. Did you verify income? Yes. Have you verified credit? Yes. Great. You're local. Yeah. We underwrite, do everything in house. But the question I'm getting right now is, it says here you guys are going to close in 19 days. Can you do that?
Yeah.
Yes, that's the biggest thing I'm getting right now. We did one a few weeks ago where from the time I met, this was not one of your clients, but from the time I met the client in DC to the time they closed was 11 days, not 11 business days, 11 total days.
Yeah.
Is
that the bonus of having everything in-house?
Everything in-house, yeah. And the agent that referred that to me said, well, can we write 11-day contracts on all of our offers? And I said, no. That was a favor, because 11 days is insanely quick.
Yeah.
And I said, when my business partners ask me, Rob, how quick can we close? I'll say somewhere between 20 and 25 days.
Right.
And guess what? That's going to help you win a contract, because as you know, 20 to 25 days is lightning quick. 11 days is just everyone was stressed out. The client that we did the 11-day closing with actually said, hey, I know we're going to close quick, but I really don't want to feel rushed. And I said, it's 11 days, you're rushed. And I said, it's 11 days, you're already rushed. So if you don't want to feel rushed, you can't work with me, because I'm going to make you feel extremely rushed, because we have to get to closing in 11 days or you lose your $100,000 EMD. And it was really waived appraisal, waived finance, everything was waived. And it was an 11-day closing. So no pressure, Rob.
Right. Well, the first question I think all buyer's agents ask the listing agent is, does your seller have a particular closing date in mind, right? How fast do they want to be out of the property? Yeah. And, we put that into the offer. If they're like, hey, they want to be out yesterday, then, that's when we call and say, hey, Rob, we need a 15-day close so they can get their money and get the heck out of there. Or sometimes they say, hey, there's no rush and we can do it more of a 25 to 30-day close.
Yep.
If you're considering buying, selling, or investing in real estate in the DMV area, visit buyingdmv.com. Don't forget to like, share, follow, and subscribe on all of your favorite social and streaming platforms. Thanks again for listening to the DMV Group Podcast.